All right. Hey, everyone. Welcome back. Today's Wednesday. My name is Mark Principato, and we're going to get right into it here today. If you're new to the stream, welcome. Let me explain to you how this works. So every Monday, Wednesday, and Friday at around 9:30 a.m. Eastern Time, I look at the NASDAQ futures. That's not what's on here right now. This is Bitcoin. But I look at the NASDAQ futures, the micro NASDAQ futures, MNQ, and I'm looking to take trades on a 1 minute or a 30-second time frame using the Trade Scanner Pro. The idea is to try to beat an Apex evaluation account, which I have set up here, and I've been working on now for probably a couple of months. See, if you see here, I'll show you this is the Trade account right here. I'm doing it through Trade. You can see my P&L. Now, I had Friday, which was my most recent day, because Monday I took that session off. On Friday, I had a losing day, and you can go back and watch that. So hopefully today we can make some of that money back. But it's a slow process, and the idea is to demonstrate a sustainable strategy rather than a go all in and beat the eval in 1 day or two, which can be done. But the problem with that is most prop firms penalize you for that, and on occasion, like Apex will run these special promotions where you can actually they'll allow you to beat the eval in 1 day. But the problem with that is once you beat the eval, you have to pay a setup fee. If you don't have a sustainable strategy and you beat the eval and then you blow it anyway in the next couple of days, then what's the point? Because you're going to be paying all kinds of money for nothing, right? So I'm going the sustainable route to show that it can be done, hopefully. So let's switch this over here. Let's change the charts. And feel free to say hello, and if you want to share what city or what country you're from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. Hey, Hussein, good to see you. Yeah, and by the way, my numbers are horrendous. Okay, I complain about this on every stream, but I was looking at my YouTube numbers, and I don't know how this is possible, but they're actually going lower. Okay, I mean, they were low to begin with, but they're actually lower. My recent streams, my recent like maybe month worth or month and a half worth of streams, the numbers are shrinking. Not good, man. I mean, I don't know. I don't know. My Twitter numbers are better, not much better, but they're better. But yeah, I don't know. Yeah, yeah. That's how it's going, Hussein. I don't know. My numbers aren't looking very good. So I've been producing more streams, and my numbers are going lower. That's not how it's supposed to go. At least if it was staying stable, or somewhat improving, but it's going the wrong way. So I don't know. I have to. I'm clearly doing the wrong thing. Although I get good feedback, people tell me, "Hey, great content, great, that's nice," but the algorithm doesn't care. So I got to figure things out. Anyway, so enough about complaining about that. Um, by the way, if you're new to the stream, hey Lucas, how are you? Watching with slight today? Okay, not sure what that means with slight, but yeah. Here, let me do this over here. Let me put this on. So you guys know if you're watching the stream, is that it? Yeah. You can press the subscribe button, press the notification bell. Obviously, this isn't working, but I'll put the little graphic out there anyway. And if you're watching me on Twitter, do me a favor and retweet the stream, because I find that helpful. Maybe I need to start looking at like Bitcoin, on the 1 minute, because we can trade Bitcoin with the CME futures. I'd rather not, because the spreads are ridiculous, right? This is MEXC over here. I can't trade this on, for my Trade account, but I can change to the CME futures. Um, Maybe I have to start doing that. I don't know. Let's change over to the MNQ, shall we? And there is a special. There's a lesson that I want to go over that I realized in my previous in my Friday stream when I was reviewing that trade. Okay, this is the MNQ, which just opened. Now, you guys know the Trade Scanner Pro is a confirmation tool, right? I repeat that on every stream. It's a confirmation tool. Now, that means that in order to use it effectively, you have to do some analysis first. That's the first step. If you do, if you jump on just signals and you don't do your analysis first, you're most likely taking random trades, right? It's not going to help you. So, well, I appreciate that, Hussein. Yeah. No, I mean, I get decent feedback. And the funny thing is, I see a lot of videos out there and stuff where the substance is pretty bad, where they're not really delivering any value at all, or very little value, but they have a lot of views, right? So it's hard for me to deal with that because this is I'm giving up an important, like, I should be on my real account right now. This is a very valuable time. 9:30 to 10:30 is a lucrative time, and I'm doing this, which it's not even a it's a eval account, right? So I'm not even getting paid for this, and I could be working on my real account and actually potentially making some money at this time because this is like prime time for making money, So it's like it's hard for me to justify. On top of that, no one signs up for the Trade Scanner Pro. On top of that, so I don't know. It's not exactly a good position for me. Um, none. Oh, okay. Okay, cool. Yeah, so I appreciate you guys that support, that stick around and say hello. But it's just hard to justify this, especially when I see people just doing really well and it seems like they're doing much less as far as the substance goes. But maybe they're doing more in the area where the algorithm, that's good for the algorithm. And I obviously I don't do things that are very algorithm friendly. Clearly, my numbers reflect that. So anyway, when you get the Trade Scanner Pro, one thing you have to make sure you do, right? I have this thing turned off over here, but you have to make sure that you turn on these tabs on the settings panel, because if you don't do that, you're going to be missing some important information that should be appearing on your charts, like the heads up and the previous trades, which can be helpful. Now, so let's do the analysis first, and then I want to share a lesson with you that I think can be helpful for using this tool. Using the Trade Scanner Pro is not intuitive. You're not going to figure it out just by playing with it. You have to watch my streams because I demonstrate how to use it. So you can go back, watch all my older streams, and there's a lot of value there because I'm showing a lot of unique situations where, like in some examples, you have to use counter trend mode and stuff like that, right? That you're not going to figure out how to do that on your own, right? So this is not an intuitive tool. You need to learn how to use it, and I'm showing you for free, right? This is my free training that that very few people seem to appreciate. So anyway, um, so we're going to do this is done in two steps. We have to do our analysis first, and then we look for confirmation of our analysis. Now, I start with the daily time frame, as you know. Now, with the daily time frame, I'm not looking at the trend really. All right. While it is somewhat relevant for day trades, since I'm working on a 30-second or a 1 minute time frame, which I know in advance, then uh, the trend on the daily time frame isn't going to help me too much. Okay. I need to look at smaller time frames to evaluate that. But on my daily time frame, there is something that is helpful, and that would be the levels. So I'm looking at yesterday and I'm looking at today. So I want yesterday's low, and I want to highlight that in the chart. Okay. I want today's low. That's the overnight low. I want yesterday's high, which is over here, and I want today's high, which is the overnight high. That's it. So the analysis is done on this chart. Also, we can just notice, right, just as an observation, that there is some resistance right here coming from a week ago, right? There is some resistance here. We want to be aware of that. That doesn't mean that we're going to take trades based on it, but we do want to be aware that there is a previous resistance here, and this could turn out to be a double top. It may not turn right now, this moment, but sometime today or maybe tomorrow, this market may turn. So we have to keep that in mind. We have to be open to that. Okay. Now, that's all I need for my daily time frame. Now we switch to we could switch to, it doesn't matter if we do a 60-minute or a 30-minute. I'll do the 60-minute because it's simpler, but it really doesn't matter. You could do 60-minute or 30-minute. Now, the reason why I'm choosing 60-minute or 30-minute is because I need to get a sense of price structure for my 1 minute or my 30-second time frame. My 1 minute or 30-second time frame, that's my action time frame. That's where I'm actually going to take trades. This time frame here is just to give me the bias or what side I should be working on, or what I like to call the market intent, right? That's what I'm getting from here. So just looking at this, what do we see? Well, I see a higher low over here. Okay, I see a higher high over here, right? This resistance. I see a higher low over here. I see a higher high. Now, yesterday, by the way, was a really tough, slow grind market. I mean, tough because it was hard to get long and stay long because at any moment this market could turn, right? That's the problem when it barely pulls back and it just keeps inching higher and higher. Great if you're very ignorant and you're like, hey, it just goes higher. Like, it's great if you're stupid, basically, because it works out well. But if you understand risk and you know what can go wrong, it's a very hard market because at any moment, you could be buying the high and it never pulls back or it barely pulls back. So I find those markets very tough. I got away with a little bit of money in my other account, not much. And I quit early because I was like, screw this. I'm not going to keep messing with this because we've seen those days where it grinds and then like 2:30 gives the whole thing back. And again, when it does something like that, the problem is if you're buying that pullback, it never bounces back, right? And those are very tough days. So I think that's characteristic of this type of environment because we're now entering June and we're entering like the summertime trade, which is usually lower volume, right? So this is typical character of this type of markets. And by the way, probably why they're having the Bitcoin conference this week, which Alex the other day mentioned that to me. I should have known of that conference, but I actually wasn't familiar with it, because I don't really pay attention to things like that, and I should have because that's something I should have gone to, right? But I'm not in Las Vegas right now. I'm in Jersey, and something like that is a great place to meet people and meet other contacts that can help for collaborations, for example. Anyway, that's where the whole world is right now. So back to our chart here. So this general trend is bullish, right? We can all agree on that. I think that's pretty clear. Now, the thing is, the current candle, though, is not exactly bullish. That's a bearish pin bar. So I have to keep this in mind. Um, we're coming off the overnight high, obviously, and we're fooling around near yesterday's high. But this bearish pin bar, I'm not going to be in a hurry to go long. So the general trend is long, which means I should be more open to supports attempting to hold and resistances attempting to break unless proven otherwise. Well, this resistance held, right? And now we're rejecting it. So I'm interested in support levels and looking for reversals at support levels. We have a support level over here, which is what? 21,407. So that's basically 21.4. We can round that to 21.4 even. And then we have this level where we're at right now, which is what? 21,484. So there may be a support here. The problem is if this candle closes like this is bearish. I don't want to step in front of that. So we kind of have a mixed situation. All right, so I'm going to lean on the long side, but I'm going to be very aware of this. Now, this brings me to the lesson that I want to teach about these type of situations, conflicting situations. I've now switched to my 30-second chart, okay? My Trade Scanner Pro is on. It says trend is bearish over here. Now, that's my 30-second. I'm going to switch over here to my 1 minute. That is my 1 minute, okay? Make sure that this thing is on properly. Yeah, everything is on, okay? So here's the thing. Here's the lesson that I want to teach. Now, on Friday, and this is typically when I lose money. On Friday, we had a conflicting situation. I don't know if you guys remember, but our 1 hour chart was basically giving us a bearish look, but our 1 minute chart was giving us a bullish look, right? That's a conflicting situation. So that's usually, so the usual rule of thumb is lean on the larger time frame. But the Trade Scanner Pro is a momentum following tool, which means we need to go with the momentum. The momentum is going to be more apparent or carry more weight on the smaller time frame until the bigger picture reasserts itself. Our 1 minute was bullish. So what do I start doing? I start shorting it because I'm like, well, we're at a bearish blah, blah, blah resistance. But meanwhile, the 1 minute had not reversed back to bearish. So here is my lesson or my solution to that. If we see a conflicting situation, like we just saw bullish 1 hour, but this small time frame is looking bearish, right? We have the failed high, looks like we just broke a support, right? This might be bearish, but we barely broke the support. In fact, this may be a failed low, and look, we're at a support. But this may be a long. But my point is, the idea should be to lean on the momentum of the smaller time frame, right? So we have a couple of choices. I'm preparing for a long here. I'm going to explain why in a moment. I don't even see a heads up though. Oh, because this thing, I have to be in counter trend mode for this. All right. Because the trend is bearish, right? Trend is, see, there it is. There's the heads up. I need to switch to counter trend mode. The reason, all right, so I'm not explaining this. Well, I know things could be confusing here because I'm jumping around. Oh, we have a signal on the 30-second. All right, well, I'm not going to chase that. Let's see if we get the signal on the 1 minute. I'll go for the 1 minute if we get it. All right, I'm too busy talking and I'm missing signals. All right, so what I was trying to say was we want to lean on the momentum of the smaller time frame if we are in the middle of nowhere, meaning we're not at any support or resistance level, but the trend on the smaller time frame is clear. Like it was on Friday, the trend was bullish. It was clearly higher lows and higher highs, right? That was pretty clear. So I was better off leaning on that until the bigger picture reasserts itself. So eventually the bigger picture might reassert itself, and I have to be open to that, which means if I'm going long near the higher part of the range, I'm taking a bigger risk. I need to be aware of that, right? So the easiest solution to the whole problem, the easiest solution, especially if you're new, is when you see a conflicting situation, just walk away. That's the easiest thing to do. You cannot lose money if you walk away. So if your bigger picture does not match your smaller picture, walk away until they match. That's the simplest thing. So that means maybe the 1 minute persists on that long side and eventually the bigger picture changes, because if it's going to change, it usually happens on the smaller time frame first, right? I'm watching for a possible reentry here. If this thing, we're back near that entry price, if we get a bullish candle here, I may take that on the 30-second chart. Let's see how that candle closes. Right? So again, the easiest thing to do is walk away until they align. So that means you may have to wait a little while. I don't like that close, so I'm not doing anything here. You may have to wait a while for the 1 minute or your smaller time frame, whether it's a 1 minute or 30-second, to realign with the bigger picture, or basically the bigger picture reasserts itself, right? You can do that, or you go with the momentum of the smaller time frame. Okay, so like for example, this momentum on the smaller time frame may be in the process of changing here. I mean, I see, a lower high developing, but the thing is, there's a support here. We're not in the middle of nowhere. There's this blue line that I drew earlier from the analysis portion. That's a support level, right? So this doesn't really fit the rule I just explained, or I guess you could say the guideline that I just explained, because we have a support level. This is more for when you don't have anything. All right, I may take this. Let's see how this closes. Okay, that's a good, nice green close. Okay, I'm going to try this. All right, so I just bought two on the possible reentry here, because we're near the entry price and we're coming off of a support and it's a potential higher low. Let me measure this risk. What is the risk? I'm long from here. 30 points. That's not bad. 30 points of risk. Okay, that's pretty reasonable. Okay. Usually like anything 30, 20 points, anything like that, that's pretty reasonable for a 30-second time frame. What starts getting unreasonable for these time frames is like 50 points or above. When you start seeing 50, 60, 70, 80 point, that's kind of high for these time frames. Right? Remember, the Trade Scanner Pro uses the average true range to calculate the risk. And as you see as the market changes character, you will see these risk numbers, these risk suggestions change, right? Like in the beginning of April, when we had all that tariff drama, we were looking at 100-point risk on like 30-second charts, which is ridiculous. All right, this isn't working. My trailing stop has now reduced my risk slightly, so I don't have to take the full 30 points of risk. I can take less. We touch that trailing stop. You got to respect the stops, by the way. And it's a good idea. It's a good idea to put the hard stop in, right? You go to your trade panel and you put all the information in here. It's a good idea to do that. I don't do that for these streams because it's just cumbersome, and I'm just willing to take the chance. But really, you should do that. Now, another thing I want to mention on the news front, we have FOMC meeting minutes today at 2 p.m. Now, so I'm not gonna be streaming at that time, so we don't have to worry about it. But that can move the markets intraday if there are any surprises in that report. Also, we have um, we have GDP annualized, which is usually not a major number. Now, I don't know if that came out at 8:30 or if that comes out at 10 o'clock, but it looks like I'm going to be in on the 10 o'clock number, which I don't like to do. But I took the trade, so hopefully it works out. Maybe we get a double bottom here. Maybe we don't. We are near a support level. Now, if this support breaks, then I'm not going to continue to lean on the long side because the supports, if this market's going to stay generally strong, then it should hold, right? So if we touch that trailing stop, I'll probably bang this thing. I'll take the smaller loss. All right, out. Goodbye. Especially going into this news report, right? So it looks like I tried taking that long at this support level and it broke. Is it 10 o'clock yet? No, that's not even 10 o'clock yet. So this trend on this smaller time frame, although the bigger picture was generally bullish, this is looking to be bearish, right? Now, maybe we get the failed low possibly here. I'm not going to take a trade until after 10 o'clock, right? I don't want to take that 10 o'clock number if there's a number at 10 o'clock. Let's see. So how much, let's see what this looks like here. How much did that cost me? $100. All right, that stinks, but it's better than losing, 200 or 300. I mean, Friday it was a $381 loss. Hey, how are you? All right, so I want to see what this 10 o'clock number, and I don't even know if there's news at 10 o'clock, but typically at 10 o'clock, the market has some type of reaction. Typically it's because of news, but sometimes the market has a reaction anyway. And I'd rather stay out of that because it's random. It could go my way, it may not go my way. Here's the next signal. Now, it's right before 10 o'clock, so I'm going to wait this one out. Well, we also have a 1-minute signal. See that? So, okay, it's interesting. Now, notice, I'd rather not jump right in. Let the first candle develop. And by the time this candle closes, we'll have our 10 o'clock candle. All right. Oh no, I haven't checked there. Yeah, I haven't checked yet. I appreciate you thank you for letting me know. I'm going to check. But thank you for that. Okay, is this 10 o'clock? No, it's not. All right. So we may get some type of spike at 10 o'clock here. I'm not taking this trade, like I said. I want to wait. But the other thing is, and again, you're not going to learn this in a book, is I like to wait for the first candle to develop after the signal. If the first candle on a bullish signal is red, then I'm not in a hurry to get into it. Right? Why would I do that? I want to see green, not red. So I'm not in this trade. This trade may stop out and I'm not in it. Okay. So that's what I mean. It's good to kind of wait. Now this is 10 o'clock number. Okay. So here's 10 o'clock. Let's see how this candle plays out. If we get a green close here, you got 30 seconds, well, less than 30 seconds. I like that candle, but let's see how it closes. And I think what I'll do is I'll take 3 contracts on this one. I do that to see if I can make the money back. Okay, I'm going to take this. There's a close. Ah, red right after the. As soon as it closes, it turns red. All right, but again, the candle has to. This new candle has to close as well. So I'm trying this long again, right, based on that entry price. Now, this is a new signal. It's a higher low. We also have like this failed low uh, configuration here, right? So I like to see that price structure. That's all supportive for longs. Now, but this market is not this structure, the general structure here on these smaller time frames is not exactly bullish. So I am kind of fighting this momentum a bit. Our bigger picture is bullish, but our smaller picture is conflicted here. So, I'm trying this. If this thing gives me a hard time, I'm done. Okay. I'm not going to keep pushing it. And like I just finished saying, it's better to go with the momentum, the momentum or the structure on the smaller picture until the bigger picture reasserts itself. Right now, our smaller picture is bearish, right? But I'm going with these reversal patterns because we have a support in the area here. It's not a major, this line that I drew earlier is a supportive area. So I'm going with that. But if that fails, and it can, if that breaks, then that means the smaller picture momentum is in play, and I don't want to keep going long. Okay. So I have two choices at that point. I wait until the market turns long and then get involved, or I try to work on the short side. Right. And those are really my two choices. Or I guess you could say the third choice, just walk away and just completely stay out until both pictures align. Okay. Like this is not what's happening right here is not exactly um, strength, especially after a day like yesterday, man. Yesterday, it couldn't pull back the entire day. And now watch, it's going to pull back all day today because I'm long. All right, so let's see if this thing can keep its act together. I don't know. It's not looking good so far. It's not really doing much yet. And it's going to look more dramatic on a 30-second time frame. But it can't seem to keep this. It's trying to hold this support, but it's not doing a good job. So if this one stops out, I mean, I may have to get out early here. I may get out early. We'll see. But like I said, so far the structure on this time frame is not bullish. It's not long friendly. Okay, I see what I'm seeing here is, we had the sell off at the open. By the way, I'll talk about the 10 o'clock candle here in a second, but this is what I'm paying attention to right now. Lower high right here, lower high right here. The only reason why I went long is because we're at a support and the bigger picture is bullish. That's the only reason, right? If we were in the middle of nowhere and there was no support here, then I would be leaning on the short side. I would at least be thinking I should lean on the short side, at least if we have no supports nearby, right? I don't want to short into a support. Although the support can break, the bigger picture is bullish. Remember, that hasn't changed, right? So that's why it's important to recognize your levels. This level that I drew here is not some random price level. This level that I drew is that was yesterday's high or whatever it was, right? That came from yesterday. That came from yesterday's candle, that level. So the market obviously is trying to do something here. It's trying to react to it. People are noticing it, basically, is what the price action is telling me. Okay. So keep that in mind. When we're in the middle of nowhere, meaning there's no support, there's no resistance nearby, we're just in the middle, and my smaller picture is showing me a clear structure, I should go with that structure when I'm working on these time frames. Right? This is particular to the 30-second and 1 minute time frame. When you're dealing with like a 30-minute, or 1 hour, those are heavier time frames to begin with. Right? But you have to look at that time frame in relation to a bigger picture. That's what gives you context. Right? So if you were working on a 30-minute or on a 15-minute, you would use like a 4 hour or maybe a daily time frame for your bigger picture bias, right? To give you a sense of support and resistance levels. Should they hold or should they break? Okay. And right now, supports should generally hold. It's trying to hold, but it's not. We're not seeing any. Not seeing any spikes my way yet. Okay. So We're not even near the profit objective yet. It'd be nice if we can get a little, if we can get halfway there, if we get to like the midpoint, I'll probably sell one contract. In fact, well, I'll keep my 3 on right now in case this thing spikes the wrong way and I have to bang it out like that, like it's doing right now. Um, so yeah, so this isn't, these time frames are very hard to trade, by the way. And if the market doesn't want to cooperate, you don't want to keep pushing it, right? I hope the market cooperates, but once you're in, you know, it's really up to the market at that point and just managing the risk. This risk isn't unreasonable. All right, it's not like ridiculous. It's relatively small in my opinion, right? 30 points, 20 points, that's not so bad on the NASDAQ. But let's see, let's let this play out a bit here. I mean, so far, I'm not liking this price action because clearly it's not going my way, number one. Number two, this is a lower high. Okay, don't want to see that when I'm long. So if we can't break that high and that sticks, then we're likely to make a lower low. See what it's doing? So I may bang this thing early. Let's see. It's trying to hold, but the fact that there's a lower low in there, I mean a lower high, is not favorable. Trying to give it a chance. I mean, talk about patience. Yesterday was one of those days that really, really tests your patience. Like unless you're just like I said, like you're just dumb, and you're like, oh, markets just go up like this all day on their own. That's just what they do. That works, like once in a while. But where that comes back to hurt you is when you get one of those days where the market starts out that way, and you're like, cool. So it like kind of bakes in a bias in your mind, and then it sells off the whole day, right? It turns like at noon or 2 o'clock. It turns, and then you're buying the pullback, thinking, oh, it'll come back. It's strong. It's strong, and then it closes negative. Those are hard days. Okay, if you have a closed mind, you have to have a very. That's why you have to have a very open mind, and you have to be okay with the market's changing. The market doesn't have to do anything. Just because it's strong or weak right now doesn't mean it's going to stay strong or weak, right? And so you don't want to get caught with that bias and it stuck in your mind, like, okay, like, and yesterday can fool you into that because yesterday was biased all day. That thing was just going up all day, no pullbacks. The pullbacks were tiny, right? So you have to, when you recognize a slow grind. I mean, I started out trying to short the market, actually, trying to take small bites from the short side. It's very aggressive. Um, and for that type of technique, I don't use a Trade Scanner Pro because I can't. And it's not something I would recommend. And it works when you have like a mean reversion environment, which I thought maybe that's what we were in at first. But when I noticed that we just weren't pulling back at all, and we just kept pushing highs and we kept pushing heights, then I just stopped with the shorts. I got some longs. I made a little money, and I'm like, I'm done with this because I don't like that type of environment. A little money is like $50. Okay, so um, not much. But when I don't like the environment, it's better off to just walk away. There's certain environments that I like, that have more movement, more character to them. But those slow grinds, they're tricky because you may at some point you may say, okay, you know what, it's long, and by the time you decide that it's long and I'm just going to buy it and hold it, by the time you decide that, and I've been in that situation many times, it sells off, and now you're caught from a bad price. So it's very conflicted. The higher it climbs, the harder it is to buy, right? Because of that possibility. That's what happens when you know what can happen. When you don't know what can happen, it's easy. You just buy it, and it happens to work, right? But you have to realize that that's a random outcome. So, man, this market stinks, man. It tries, and then it's like, no, I'm not going anywhere. And I really don't like the lower high. We keep trying to bounce. There's an area here, it keeps trying. But I'll tell you what, if it keeps testing that area, it's going to break. Because what's happening is people are continue to buy, and it's not happening. Like, it's not following through. So they're all going to sell. And when they all sell, it's going to spike through the stop. Right? That's what's likely to happen. And I'm going to have to bang it out and take another loss. and then I'll be done. I'm not going to continue to trade. All right, so I'm all I could do at this point is hope that this support holds, and it's trying, but we're not getting follow through. It's after 10 o'clock. All right, so let's talk about the 10 o'clock significance. So you guys know because I talk about this all the time. Uh, 10 o'clock, the 10 o'clock candle is what establishes the opening range. Okay, so the opening range is part of the opening range breakout strategy. You can Google that. There's a lot of information on that. And how I believe that's relevant. There are a lot of people out there that they try to build strategies around it. They use it for, to get you to click on their videos. I'm going to show you the only strategy that works, blah, blah, blah. I don't find the opening range itself as a strategy, I find to be hard to make money with. Like I've never made money with that. I've tried. But I do find it helpful, right? When you switch over, we'd have to switch over to the 30-minute chart. I can do that because my my buttons are on my 1 minute over here. When we look at the 30-minute time frame, right? You want to see that first candle, right? This is the first candle right here. Okay, the first candle. That's your opening range. Once that's closed, that's the opening range. Is that it? Oh, what is this? That's a big candle. Okay, this is the opening range. So when we go below the opening, so the way to use that, and you use that with 30-minute candles. Man, this thing stinks. So the way I like to use that is if you break above the opening range, that's a bullish bias, right? So that should at least tell you it would be wise to lean on the long side. Or if you're using the Trade Scanner Pro, you look for long signals. Okay, if you're above. If you're below, you break the low, the opening range low. This isn't good here. Okay, I'm going to prepare to bang this thing out. I'm not going to add. This would be a very aggressive add, because you're near the stop and you're taking a small risk on that add anyway. Because if it stop out of the whole thing, but I have 3 on anyway, I'm not going to add here. But if I had 2, this might be a good place to add. Okay, because the stop is right here. So think about it risk-wise. You're taking half the risk on that add if you were to put on another contract there. Okay, now, so if you break below the opening range low, then that's a bearish sign, right? And you should probably be leaning on the short side. Now, here's the thing: when you're at the opening range boundaries, like if you're at the low or at the high, that can also be a support or a resistance level, right? And you want to be very aware of that because you can get counter trend signals at those levels if the market's going to stay inside the opening range, right? Which is more of a consolidating type of market. But there's many times where it'll stay inside, where it'll touch the bottom, pop back up into the middle, or maybe work toward the high, reject the high, come back into the middle. So you want to recognize that because it can give you some helpful levels to work with if you can confirm them. And the Trade Scanner Pro works well in that type of environment. Okay. So man, this thing is tricky today, man. Look at this. This thing is not like I'm glad that it rejects the low, but it doesn't follow through. So what I need to see here is I need to see this. Okay, that would tell me the shorts are getting squeezed. At this point, they're not getting squeezed. All right, what's happening here, it seems, is that people are getting long. It's not following through. Okay, but someone is still buying because if they weren't, we wouldn't have had that rejection. So someone is still buying, but when they give up, when that buyer gives up, this thing is going to break. Okay. So right now, the buyer is still there, someone or whoever, something's happening there. For whatever reason, that support is managing to hold. Okay. But once they give up, this thing is going to break. So I can't really forecast anything here. It's up to the market. Either we hold or we break. That's it. Okay. I hope we hold because I'm long. So we do have this failed low pattern. It's nice to see, but we need follow through. If we don't get that follow through, this is going to break because you have someone accumulating. Maybe it's a short covering. Maybe someone is short from up here. When I say someone, I'm talking about like a large player, maybe an institutional player. I don't know. Maybe they're short from up here, and maybe they're covering. Okay, and that's what holds up the market. And maybe retail is shorting here because they're like, oh yeah, it's weak, and they keep getting caught by that buyer. I don't know. So let's see. Let me see what you say there. When there is much fighting at a level, could we play off the retest afterward if we get a? Well, yeah. I mean, if the level continues to hold, right, like it's doing here, the Trade Scanner Pro gave us a few buys at this level. I mean, first we had this one, which failed. Then we had this one, which is still in play. But this is slow. This market is slow. I mean, it's not, we're just gyrating. We're not doing anything right here. We keep rejecting. We have this really tight consolidation. We reject the top of it and we reject the bottom of it. At some point, it's got to break one way or the other. And I hope it breaks my way. But, um, why do my A's look like that? Uh, I don't know, eh? That you might want to ask YouTube why your A's look like that. So, yeah, man, this thing sucks. Well, the thing is, we can't, at this point, I can't do any, either I stop out of this thing or I try to give it a chance, right? So it looks like we're going toward the stop. And if we touch it, I'm going to have to respect it. Now, every time we go to that low, if you notice, oh, there's a stop. Oh, 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 oh. Man, this thing will drive you crazy. It's trying to give us another signal there. That's what's happening. We're getting the heads up for another signal. Now, if I stop out, I'm going to have to just stop. I can't continue because that's how you blow the account. Right. So if the market's nice enough to let me stay in this trade, that's a gift from the market at this point. Also, this is another place to possibly add again, right, in the same area. Like if let's say you had one ad on that previous one, it pulled back to here, it's trying to hold again. This could be another ad because your risk at this point is the lowest, right? If I add right here and then this thing turns around and stops out, my risk is the lowest. I'm taking, what is that, like 5 points of risk? That's like nothing. So that's a great place to add, right? There were two ad opportunities here. But again, the Trade Scanner Pro doesn't tell you to add. You have to know to add, right? You're only going to learn that from watching my stream. Okay. Wow, this thing almost stopped out. That would have been a beautiful ad. Look, and that's another double bottom, right? So it keeps double bottoming. Look at this. Double bottom. And it's a triple bottom if we go back here. So I think what's happening is, again, I'm just guessing, but from this price action, they keep trying to sell it. Someone tries to sell, and they keep getting absorbed. And if this thing doesn't break lower, if it doesn't break, then you're going to see a squeeze because you have shorts. Every time it pops up and tries to sell off, shorts join, right? Shorts continue to add. And if they're wrong, you're going to see this. Okay, that's what's going to happen if they're wrong. If the longs are wrong, which is going to be part of my group there, you're going to see this, right? You're going to see that. So it's going to be one or the other. Okay, so I'm hoping it's the shorts that get squeezed. And usually I can tell you one thing about this type of price action. When the market sells off or the market's weak, it usually sells off in a hurry. It doesn't linger like this. So that's one argument in my favor. The lingering is usually a sign of strength, especially if it's lingering at a support. Like usually when you sell off in a hurry. Now we're coming up, maybe there's a 1030 number they're waiting for. I don't know. And that 1030 number may spike this thing if it doesn't spike beforehand. But man, this is a lousy market. I mean, ever since I got involved in this thing, look at this. This thing sucks, man. Look at this. So patience is very hard to have. Now, nice thing about using a prop firm account is if I lose this money or whatever, it's still a prop firm account. So I'm not actually losing real money. If this is a real account, it's even harder because now you're losing real money. That's one of the advantages to using a prop firm. Now, prop firms are, they also have cons as well. There's pros and cons, right? But one of the pros, especially for a beginner, is you can learn and you can throw around size without having to face the reality of the risk. Meaning, you can develop your strategy or practice your strategy, and you can throw around mini lots, for example, because I'm throwing around micro lots here. You could throw around mini lots and you can blow a couple of $1,000 if you're wrong and not worry about it, right? Like, it doesn't affect your confidence because you're like, all right, so you blow your prop account and you buy another one, right? You buy another eval for $30 or $50, right? Losing $50. Oh, I'm going to get stopped out on this one. Looks like they're going to get me here. Losing $50 is a lot better than losing $2,500. I think you would all agree. So that's one of the advantages to using a prop firm. And if you can eventually beat the prop firm, then you can start getting payouts. Now, of course, some of the cons with a prop firm is you can lose. You're paying, you're like renting the account. So over time, it just continues to cost money, and you never make money, right? So that's one of the cons, and it can really turn into like a, oh, all right, goodbye. I have to say goodbye now. It broke. All right, I'm out. So let's see how bad this is. $300, man. I'm giving back all my profit. I was up $1,000 in this account. So, all right, I can't continue now. I gave that thing a chance, man. I took two trades. They both failed. There was some attempts to try to turn that around, and it broke. Okay, like I said, it's going to break one way or the other. It broke the wrong way on me. What am I going to do? Hey, Grego, what do you say there? Let's see. BTC seems, if the usual correlation plays well, yeah, they may be moving together, right? But that correlation, that's why I don't always go by the correlation, because sometimes it seems coincidental. Um, but yeah, if Bitcoin is breaking, then that may help explain some of this lousy price action. But this thing is trying to break, but look, we're getting another signal here to go long, possibly. Right? So that stopped out. By the way, this break, this is not characteristic of a bear market. That's not really that bearish. This is characteristic of a bearish market right here. That's usually what you see, not this. This lingering means people are continuing to short it, and look what's happening again. Like that right there, you had like a breakout, which could have sucked in a number of shorts, and now look, it's going against them. Now, I know because I've been in this situation many times. Oh, it's a short. And I short it, and then you get this. When you get this right after you're short, that's not what it should do. So, yeah. Now, there's really not much changing on the bigger picture here. So what can I do here? What time is it? Yeah, it's almost 10:30. I'm not going to continue. I still want to be long, actually. Look at this. They shook me out, and now it's reversing in their face again. See that? So this is not a short. We got another signal on the 1 minute. All right, maybe I'll take that with one contract. I'll try one. Better than three. Let's see. Let's see how this candle. Let's see how the next candle goes here, because this thing likes to pop up and then give it back anyway. Now, the 1 minute, of course, is going to carry more risk. Let's see. Now, the 1 minute, what is the risk on the 1 minute? Of course, watch, this is going to be the squeeze. What is that? 30 points? 30 points at the blue line. That 30 points is that's, again, that's reasonable. Let's see if this candle, is this candle gonna, we have 5 minutes until 10:30. Now, maybe someone can double check. Oh, look, pin bar. All right. Do we have that GDP number at 10:30, or because I know there was a GDP annualized, I just don't know what time it comes out. See, that's why I like to wait. Now, We may have an opportunity. Maybe I get one of those ad opportunities here. Let's see. Or maybe I get a higher low. Let's see. But man, this market sucks. I don't even think I'm going to trade my real account today. Like if this is to the market, like I'm not even going to bother with this. All right, pin bar. All right, I'm going to try it on the pin bar there, the bullish pin bar. That's a possible higher low. I only have one. Okay, so if I'm wrong on one, all right, it won't be horrible, right? And I got it. That's about 30 points of risk to the red line. All right, so let's see. Now that I only have one, maybe what I can do if the market messes around with me again, right? Like maybe it wants to mess around. Maybe it gives me an opportunity to add a second one at a better price. Let's see if I have that opportunity. I may get one now. I may get that opportunity now. So I'm looking at the 30-second and the 1 minute because signals can occur on both, right? And now remember, I'm in counter trend mode still. I'm in counter trend mode. That's the reason why I'm getting long signals rather than short signals because the trend, the momentum on this time frame is still bearish, but I'm not agreeing with that momentum simply because of this. This elongated lower high, lower low situation is not exactly bearish. So if my one contract stops out, I'll say goodbye. Oh, there's no, there's, okay. Thanks, Hussein. Yeah, I'm aware of the FOMC meeting minutes at 2 p.m. But I thought there was GDP annualized. Maybe that came out. Maybe that was at 8:30. Maybe GDP annualized or whatever is not a big number. It's not a big deal. I just don't like if there's a number coming out, I don't like to step in front of it. You know what I mean? Although if there is anything at 10:30, I am now in front of it. See, look, this could be a possible ad over here. See this? And look, we got a signal on the 30-second as well. Look at that. At the same time. See that? So if I add here, I'm taking half the risk. All right, I'm going to try it. Screw it. I'm going to try it. So I just add. I put on a second one. So instead of buying 3 or 2 at the same time, right, I'm buying 1 at a time. Right now I can, if I'm going to bang this out, I'm going to bang out 2. Now we'll see if now I took on that second one, I took half the risk, right? So if my risk, what is my risk? 30 points on a 1 minute. That's not bad. So that means I took 15 points of risk on my second one, right? That's better than 30 points of risk on 2 lots or 2 micro lots, right? So sometimes you get those opportunities to add. And if that one works, you took a little risk and you get a big reward, a much bigger reward if it works. If it doesn't work, you still lose, but you just lose less. All right, I'm being aggressive. I'm being a little aggressive here because, like I said, I was going to stop, but this market is not collapsing. So, but I'll tell you also, like, I'm probably, like, with this kind of action, I'm probably going to just not bother with my other account today because this is pretty bad. I don't know what this market's waiting for. When I say bad, it's just because it's just gyrating. It's not going anywhere. Would I have it? Would I rather have a day like yesterday or today? That's a good question because they're both pretty bad. But I guess yesterday would be a better day because at least there was a bias, like it was clearly bullish, so there was more of an opportunity to align with that. When you have like this, where it's not really going anywhere, there's really nothing to align to. Okay, so man, can I get like a little favorable price action from the market? Like, it'd be nice. So, you guys have any questions so far? This is tough, man. This is tough. And this is probably the kind of character we're going to see. We're probably going to see more days like this over the next few months. I mean, not every day, of course, because when there's a catalyst, when there's some type of news, the market will move. But when there's nothing, like this week, if you look at this week, We don't have non-farm payrolls. That's next week. We don't really have any heavy news, right? There was the core PCE comes out on Friday. Well, that's somewhat significant, but that's not like a huge mover. That's a nice intraday mover, but you know, so and still that's Friday. That's not today, and that's it. So when there's a lack of news, especially when there's lower volume, it's just not a good combination, right? I mean, look at this. Like this thing can't get out of its own way. It tries and then it turns red again. See that? Like that sucks, man. And that may build enough momentum to get it back to the stop. Let's see. I don't know. Hopefully it doesn't. But if it does, I'm banging out, and that's that. There's some times when there's just the type. There's some times like with the environment, it's just not worth trying to battle with. You know, there's just some times like this. This would probably be a good time. This type of market would probably be a good time to walk away until something eventful happens. Meaning, maybe you wait for the squeeze, right, and it breaks above there at some point, maybe by 2 o'clock, and then maybe it becomes worth it at that time. Because I mean, shorting this, man, look at this. Shorting this is not easy because it's not like a clear cut sell off. You know, it's just kind of bearish. You know what I mean? Which which implies to me that this thing doesn't want to sell off. And at some point, these guys are going to get squeezed. So, lesson, if that's what you suspect, right? Like, okay, this thing's not really selling off, but the squeeze is not there yet. Instead of trying to hunt for the squeeze, which is what I'm trying to do here, it's not working very well. Wait for the squeeze to happen, right? It should look like this. Let it happen first. And then after it happens, then you look for trades. You don't buy the top of the squeeze because then it's likely to pull back in your face, right? Let the squeeze happen and then look for signals after that. So what does that really mean? Break resistances. That's what it means. You got to break this area right here. Price has to push above that area. And it would be nice if price can do it like in one candle. Right? One or two candles. If you get that, then look for higher lows. Look for signals to go long. And that may not happen until like 2 o'clock. What time is it? It's just after 10:30. Man, this market stinks. When there are conflicting trends between 4 hour and 30 minute, is it usually better just to wait? Yeah. Well, yeah, a smaller size or just walk away, right? Like this market here, it is pretty conflicted, right? Like the bigger picture is bullish, but this is not acting bullish at all. Although it's lingering, right? It's while it's neutral to bearish because this price action, while it is full of lower highs and lower lows, you have to understand the character of a bearish environment, right? This is the character of a bearish environment. When something is selling off, it should just look like this. It should look like this for an hour or two. It should just keep selling off, right? Not this. This means people are trying. This means people are pushing it. Like the selling continues to push. It tries and tries and tries, and someone's absorbing it. That's what that tells me. And if that continues long enough, what's going to happen is the shorts are going to realize that they're wrong. Unless this thing can break hard on the bear side, which can happen, but at this point, I think to get that hard break, you're going to need something significant, like some kind of news is going to have to come out or something. So, man. So again, once again, just like before, this is giving me, I'm not going to continue to add. I have my two, and if this doesn't work, I'm done. This will be my third trade, but it almost touched the stop. It keeps touching this lower area, and then it kind of rejects it. See, those are places to take lower risk. Okay, especially like I only had one contract on, so I put on a second one at a lower price. You could put on a third one, and if this thing holds, you're gonna have yourself a nice trade. If it holds, if it breaks, you're gonna lose anyway. But the good part of that is you lose less on that second lot. So instead of taking, 30 points on two lots, two micro lots, you take 30 points on one and 15 points on the other. So the loss is smaller, right? So that's risk management. But the thing with the Trade Scanner Pro is there's nothing that tells you to do that. So like if you're new and you're just starting out with it, you're not going to know to do that. That just takes time to, you have to watch my lessons where I teach you how to do it so that you're aware that you can do something like that. So it could help enhance your trade. But see what I mean? Like it tries and it just gives it right back, like in one candle on this 30-second. Like it's not going anywhere. These are 30-second candles, so they don't carry a lot of weight, but still, it tries to build, and then in one candle, it's like I'm giving it back. This market stinks, man. There's no momentum here. It's just overlapping and overlapping. So they may tap me out this one. Let's see, maybe. I'm just going to respect the stop and say goodbye. So I don't know. I wonder how the other fake gurus are doing today. Because, there's a lot of people streaming at this time, and I can't compete clearly. How am I doing with my numbers? Yeah, my numbers are pretty normal here. Yeah. A lot of fake gurus stream at this time. And maybe they do better because they start earlier. Maybe. I don't know. I think they may start at 8 o'clock and they just stream the whole day. It also helps if you're a girl. That helps too. You don't even have to be that good looking. All right. So let's see, Mr. Market. Are you going to make me look bad once again? Probably. Maybe not. I don't know. We'll have to see. I'm going to stay with this. I mean, I'm now over like an hour here in the stream. I usually like to sign off now, but let's give the market some time here to either stop me out or maybe it goes my way. But man, look at this. This could be another opportunity to enter, by the way, possibly. And it keeps giving me these heads up, right? This could be a possible another entry. And now this again, I'm taking the least amount of risk. If I were to add here, right? I'm not, as you can see, I'm not in a hurry to do so. If I were to add here, and see, goodbye. All right. If I were to add there, that would have been the least amount of risk because I would have bought it and I would have banged it out right away. Okay, I'm done. All right, let's check out how bad this is. $430. All right, so I gave back in these 2 days between Friday and today, I gave back most of my profit. I was up $1,000. What am I going to do? Now I got to make it back. I mean, the market just sucks right now, man. Oh, thank you. I don't get, the problem with that, is I only hear that from guys. Okay, so maybe if I was another type of guy, that would be a good thing. But guys only seem to tell me, "Oh, you're a good-looking guy." Really? Because I certainly don't. Or one guy told me, "Well, the girls are thinking it; they just don't say it." I don't know, man. That's not the feedback I get. That's not the behavior. Usually, you have to read a girl by their behavior. That's not the behavior I get. So I don't know. I don't know. Uh, Guys are honest. Maybe they're honest, but like I say, you have to judge by the actions. And let me tell you, the actions usually don't go my way. Let's just put it that way. So yeah, I don't know, man. Or maybe I'm just really blind to green lights. But anyway, this isn't a dating stream. And at the rate I'm going, all they have to do is look at how much money I'm losing today. I'm certainly not getting any dates after this one. Man, this market stinks. I'm not going to continue. No, I'm just saying. I want to do, like, I've always wanted to do a dating podcast. The thing is, talk about being if I do a dating podcast, you want to talk about being a fake guru. I'd be the fakest of fake gurus because one person you don't want to take dating advice from is me. I can guarantee you don't want to take dating advice from me. I'm not taking the signal. We can watch it. But so I figured maybe I should do a dating podcast with a guy that can get girls, and then I'd be like the contrast. Like, okay, listen to this guy, don't listen to me. And maybe that would be like a good podcast. I don't know, because I just think it's an interesting subject, especially the way things operate today, because of things like Instagram and stuff like that. I think it's just it's a very interesting look into human behavior and how it's affected by technology. But all right, I'm not going to get into that because that's not what we're here to talk about. Anyway, all right, guys, I got stopped out 3 times. I lost $430 here. Not good. But like I said, when you're using a prop account, okay, so we learned some lessons. It doesn't have to cost you real money. Like if this was $430 in my real account, that would suck, man. Like that, I don't want to be losing $400 in a day. Look, all the buy signals are appearing. Look at this. Now watch, this was the one that goes, right? Watch. I'm not going to take this one, but this is what I mean. Like this market's not really selling off. Like this is not really a sell-off. See what I mean? Watch this one go. And all it's doing is sucking in shorts, right? And then they're all going to get squeezed at the same time. And of course, the one that I'm not in is the one that's going to go. What am I going to do? Uh, yeah, yeah, because as a guy, I mean, things have changed a lot compared to the way they were 20, 30 years ago, and a lot of it has to do with technology. We have Mark Zuckerberg to thank for making things very hard for us. And if you're older and all that kind of, it's even worse. So anyway, um, oh, hey UTXO, how are you? I've been messing with those the SPX options. Yeah, it's hard, man. Yesterday, I could tell you a quick story, and then I'll sign off. I was what I try to do is I try to take an options trade each day, just to help, just as like a side thing, to enhance whatever I can do with the futures. Or if I'm losing, if I'm having a losing day, I can make some money back selling premium, right? And so yesterday I short the, what was it, 59.20, 59.20, and I had a call spread, a bear call spread, 59.20 to 25, right? And I shorted it. I opened up that position. It was only, I put an or limit order in. I got $100 for it. And that was when the market was kind of flirting with highs, right? So I'm like, okay, I got this. Would you believe, with 1 minute to go before the market closed, because it was hovering around 59.15 the whole time, right? With 1 minute to go, it closes at 59.21. 1 minute. I'm like, you've got to be joking. And it closed, it was in the money or whatever. And it cost me what I think it was $75 because it was like a point and a half in the money.